Alright, how's it going, YouTube? Stocks by the numbers. Welcome back. Thanks for joining me here on a weekend. I know holiday weekend. I hope everyone's having a good time, hanging out with friends, family, but of course, number one priority, remaining safe. But I wanted to look at something here as per request of our Discord channel. And name of the company in question, Norwegian Cruise Line Holdings, ticker symbol NCLH, listed here on the New York Stock Exchange. Company closed flat, $14.48. And I know that a lot of people are starting to look at these cruise lines because, as you see, bottom right-hand corner, we're approaching the end of May. So we're rolling into June, July, August. Everyone and their brother wants to go on vacation. People love cruises. You pay X amount of dollars. You eat 48 pounds of food in 7 days. And, it's just an overall great experience. So obviously, these companies were getting smacked around 2020, 2021, and even 2022 because there were multiple lockdowns still in effect that, of course, affect a company like this. Any of these travel companies or, luxury leisure companies that, they all took big hits here. And right now we're looking at a market cap $6.14 billion. The company is bleeding right now, almost losing $3.50 per share. But if we come down here, we can see, it has been kind of sporadic and bouncing around. But as of late, the company 2 for 4, 2 and 2, I guess. But 2 beats, 2 misses there on the EPS side. We switch over here annually, and you can see, right, this is what we were talking about. The company was up $6 billion in revenue, net income $950 million, roughly, 15.8% profit margin there. And then the next year, you can see a slight increase on the revenue up to almost $6.5 billion. Net income still over $900 million. Profit margin dipped a little bit, about 14.4%. And then, of course, you can see 2020, that $1.28 billion, if you recall, right, if we come down here, everything started to pull back, like February, March, going into April. It was still rocky. So, unfortunately, that $1.28 billion was really just like, for like the first quarter. And then, obviously, everything got locked down, and the company really wasn't able to make money. You roll into 2021, you can see about $650 million. The company lost $4.5 billion there. And then, as of last year, 2022, now we're starting to see the rebound. People, obviously, lockdowns have been lifted, and people now, they want to get out. They want to have a good time. They want to go on a cruise. So there you go. Revenue started to climb back up here, $4.84 billion. Now, obviously, they are not really back to where they were. But, again, if we check out the forecast, which we will in a second, you'll see that I think they're expecting about $8.5 billion in revenue for the year of 2023, and then just slight increases after that, going up to about 9.5, and then eventually 10, I think, by 2026, if memory serves correct, but we'll look at it. But again, you can see this nice, boom, little V recovery happening there with the revenue, and if we switch over as of late, you can see, looking at the quarters again, starting out in 2022, slowly picking up, and then revenue jumps up to $1.2 billion, $1.6 billion, 1.5, and $1.82 billion. Also, the profit margins have been slowly increasing, random Steam friend, but, basically, as of late, the company is starting to rebound and rock and roll. The problem is, honestly, in my opinion, I was never a big investor or trader of these cruise lines, because I feel like any little thing that happens can just completely swing the price of the stock. And of course, the fact that Wall Street apparently just basically intertwines all of them together. So if, I don't even know the other cruise lines, but, if another cruise line misses earnings or, comes out with some sort of negative report or headline, then this company usually will also follow suit, and that company will be down like 10, 12%, but Norwegian Cruise Line will also drop like 6, 7% on the day. So I will say, in my opinion, definitely significantly harder to time this stock in the shorter term as opposed to the longer term. Also, apparently, I'm assuming this has gained the eyes of a lot of younger short-term traders here, because just looking at the volume here, this is where the company was rocking and rolling. Look at this, 17, 18, 19, right? This is where the company was bringing in billions of dollars. 18, 19, look at that growth there, 6 billion up to 6.5 billion, profit margin 14, 15, 16%, right? Definitely nothing to sneeze at. Then all of a sudden COVID hits. Look at the massive increase in volume down here, bottom of the screen. Just look at how slow and steady. Some people probably watched the numbers, maybe added some shares to their long-term portfolio here and there, and then all of a sudden now, in my opinion, I think the stimulus money comes in just like we've seen with so many other situations. Now you have a lot of younger traders, and what happens is when we trade, see, sometimes we're not that confident, and what we do is we tend to become creatures of habit, right? So a situation like this, Norwegian Cruise Line, if you saw a tank and then look at the big volume here that came in, right? So you step in, all of a sudden the son of a bitch starts rallying, you made, money hand over fist, so you get out, you're watching it, it runs up, okay, now it's too high, so I'm going to bet against it. Holy shit, I was right again, I'm 2 for 2. So what happens is, once we start to see success, whether it's going long or if we just bet against stocks or the market and we, make a couple of wins in a row, what happens is we get comfortable and we become creatures of habit. And now I think, in my opinion, the reason why there's so much volume here on this stock is because people made a couple of bucks here back in the day, tail end 2020 and 2021, and now it's just become a staple on their watch list. And this is something that people are constantly trading in and out. Now, could be viewed as a good thing that a lot of volume is coming in, could also be viewed as a bad thing as well, because the short-term traders could really screw you over if you step in now and take a long-term position, and then all of a sudden, they put it on Wall Street bets, and everyone says to stay away from it. I mean, you guys know how this works. But long story short, market cap still up to $6.14 billion, and back here when the company was bringing in $6 billion, you could say fairly valued. I know they do have some liabilities in the long term, I believe. But overall, the company was profitable, revenues were growing, so I would have said, like here, this is a nice stable stock to own and, tuck some shares away in the long-term portfolio. However, as of late, again, the company, even though they're rebounding, not really back to where they were, right? So revenue, again, as we see here, going back to 2015, 4.3 billion, 4.8 billion, 5.4, 6, 6.4, right? So slow, steady, stable growth, exactly what you look for. Here comes the lockdown, as we see, 1.28 down to 600 million. Boom, we rebound this year, slightly coming in above estimates for 2022. Company posts 4.84 billion off estimates of 4.83 billion. So trending in the right direction. However, even after all of these lockdowns have really been well, I don't know what the word I'm looking for is. Dissolved, ended, I don't know, terminated. Sorry, it was with family yesterday, did a little bit of drinking. But anyway, long story short, as you see here, 2023, they're expecting a nice breakout year, $8.5 billion. So basically, they're expecting, again, everyone and their brother to go out and go on a cruise because everyone was locked down, everyone's been pissed off, so boom, they're going to go out on their cruise. And obviously here, if this didn't happen right here, chances are they probably would have continued to grow these revenues, 6.7 billion, a 7.2, a 7.6, and boom, 8.5, right? Then it would have made sense. But as you see, even over the years here, expecting 8.5 billion for 23, and then we keep moving, 9.2, 9.84, right? 10 billion. So they're expecting continuous growth here now and moving forward for the next 3 to 4 years. Even the profitability, you can see. They came in losing $4.64 a share against estimates of $4.48, so a little light there. And as you see here, have been struggling since going back to 2020. However, again, before that, the company was doing just fine. And now, 2023, they're expecting EPS positivity of 77 cents a share, which again is not really as high as it was, as you see here, up to $3, $4, even $5 a share. But at least they're starting to trend in the right direction. Remember, a lot of these companies now, all newer money coming in, 22, 23, 2024, all of that excess money now in growth is probably mostly going to go back to paying down debt or any liabilities that were accumulated during these 2 or 3 years here. So that's why I'm not beating the company up too much. I do like these forecasts here again, going from 77 cents up to $1.57 a share, 216 back up to 266. However, of course, even all the way down the road in 2026, making 266 a share, now we're only at about 50% of where the company was pre-pandemic. So that's why I'm excited to see these numbers continuously grow. However, I just feel like it's going to take a lot longer than people think for this stock to really get back to where it was. If we switch over here and look at the numbers, obviously the company is losing money per share, so there is no PE ratio. Trading 1x sales right now. not really the best indicator. However, it is the lowest it has been, really, going all the way back to 2016. Price to book, stock is trading 89 times book value. See, now that's what I mean. These are some of the metrics that scare me here. I no longer look at enterprise value, because obviously it's dictated also by the price of the stock, and even when the stock gets overinflated, the enterprise value shoots up through the roof just because of where the stock is trading. So not really the main metric that I use here. However, if you want to look at it, you can say another company would pay $19.2 billion to buy out Norwegian Cruise Line, and the market cap right now is $6.14 billion, right? So obviously, if something like that happens, you're going to make a serious return there. But moving on here to the profitability ratios, this is what I'm saying. You can see, obviously, again, everything kind of shits the bed in that 2020, 2021 range, right? So the company was slightly positive here, 5-6%, dips down into the negative 20s, and is slowly climbing in the right direction. Still not back positive, though. The return on equity has been consistently slipping, actually, year over year. The return on invested capital went massively negative there again for the 2 years, as we spoke about, and then has since climbed up minus 16%, now sitting about minus 10.6%. So that's what I mean. Some of these numbers are trending in the right direction, but they're not necessarily where they were. So the company is definitely still struggling in the moment. However, of course, I know that, like I said before, summertime, I know these cruise line stocks get hot, so now we're going into June, July, so I can understand if you want to jump in and ride a little wave here, but in my opinion, the next earnings report is really going to dictate where the stock is going to go here. The gross margin percentage, again, you can see was well above 30% for 4 years in a row, goes massively negative, then it rebounds to about minus 1.25%, right? Great rebound right there, year over year. Now it's sitting back up here at a slightly below 20%. And now, not necessarily a bad number here, sitting at about 20%. However, again, going back to previous years, you can see it still needs to get about 50% higher to get back to the norm. Operating margin slowly increasing here. It took a little dip from 19.6% down to 18. Then we go massively negative, of course, and then it has since been rebounding, minus 29.5%, 1.4%. 1.4% operating margin when it was high teens, almost 20%. So that's what I mean. A lot of these numbers are really showing that the company has been struggling as of late. So a flat or just an unpopular volume stock, or something that is slowly, again, going to remain flat or even possibly decrease in value, it's almost justified here in this situation. Because, again, I understand the positivity that the company is rebounding, but you would think 2022 would have been their breakout year. But, of course, I'm sure a couple of things happened, whatever. And, obviously, I actually think 2023 is going to be their breakout year. Because we saw the forecast before expecting north of $8.5 billion for the year of 2023. So if the company does consistently meet or beat revenue estimates moving forward for the next couple of months, and then they close out the year at or above those estimates, well, now not only can you say the company has completely rebounded and gotten back on track, but now with revenue north of $8.5 billion, that's now the highest it's been, even going back to 2015, 2016. Right? Because they grew from 4 to 5 to 6 to 6.5 billion. Boom. Now 2023, 8.5 billion. Right? So if that does happen, then we can reevaluate and recheck the situation and say, okay, it looks like they're back on track. All the numbers are lining up again. Boom. Now it's a buy, just like it was back in 2017, 18, 19. Inventory turnover has been increasing. Again, as we see, was north of 50. And then pulled back to the high 40s, and then pulls down to 26.5, 22.5, then rebounds as of late, 36.75, now sitting at almost 38. However, again, if we look back at the previous years, we're not quite back to where we were. Asset turnover was basically maintaining a median average of about 0.4, seriously dropped down, of course, as the rest of these numbers during 2020 and 2021. And then since rebounded from 0.03 up to 0.26 up to 0.33, right? So that's what I mean. A lot of these numbers are trending in the right direction. They're just not back to where they were. And that's what's kind of raising an eyebrow. That's why I think again, I appreciate the fact you could on one hand say the stock is undervalued. However, on the other hand, again, see, I'm more of a wait and see kind of guy. Let them come out and blow everyone's hair back and show the proof in the pudding and actually post good, healthy, growing numbers again like they were pre-pandemic, and then we can talk about taking the next leg higher or potentially even getting the stock back up to the 40s and 50s where it was pre-pandemic, right? We look at the revenue here. Oh, we're looking at quarterly. Okay, there we go. So as you see again, we looked at the slow increase in revenue. It dipped down. Now it's back to 4.84. As of right now, supposedly they're looking at about 6.1. Cost of goods sold, though, look at this. The cost of goods sold has now ballooned up to more than the revenue, right? And again, when everything wasn't locked down, you can see there was about 66%, it looks like, of total revenue was cost of goods sold, right? So the revenue always outweighed the cost of goods sold. And now we come here, and again, revenue has since rebounded, 4.84 billion for last year, phenomenal. However, cost of goods sold, 4.91 billion. So the company now coming in with negative gross profit, really still maintaining that negativity even though we're coming out of these lockdowns. So that's why it's kind of raising a couple of red flags for me here. And I know a lot of people, again, we've seen the cruise lines beaten up. I know we're approaching summertime, and I understand that a lot of other people on YouTube or a lot of other analysts may say it's a buy. But again, I'm more of a wait and see kind of guy. Let them come out with good earnings next quarter and jump up, even if it's 10, 12, 15%, and we missed a rally. Because even though we missed a rally in the short term, we're going to know in the longer term, we are now absolutely, unequivocally, no doubt, no questions, investing into a company that is now completely rebounding financially, and it will only go up to where it was and get better for us over the years, right? That's why I say work smarter, not harder. Don't try to be that financial genius where you try to time the bottom and catch the pops. Well, with a company like this, it's not worth it, in my opinion. I will say that. With a company like this, it's not worth it. But even coming over here, yes, the operating expenses, as you see, up to 1.37 billion, the highest it has been going all the way back to 2016. Operating income, of course, severely negative, still negative, coming out of 2020 and 2021. Obviously not back to the positive numbers it was back pre-pandemic. All right, you know what? It's starting to piss me off there. There you go. My apologies. But again, we do have some positive numbers. We do have some negative numbers here. If we look at assets and liabilities too, the way they were consistently outweighing, and then you see going into 2020, it starts to get closer, and now even going into 2022, now we can see assets have been maintaining that $18+ billion mark. However, now liabilities have also ballooned up to about $18.5 billion. So now we have a 1-for-1 ratio when we used to have a 3-to-1 or a 3-to-2, going back here when the company was rocking and rolling. So again, I know forecasts are up. However, a lot of these other fundamental metrics seem to be suffering right now. The equity obviously is assets minus liabilities, and as we see, we're down to about $68.5 million, which definitely doesn't compare to where the company has been. Company holding tens of billions of dollars in debt. Look at the book value per share. 16 cents. That blows my hair back a little bit. But again, is the stock going to crash down to 16 cents? Probably not, right? I mean, that's just a little extreme here. But overall, again, to tell me that, if someone pulls up the symbol and then comments and says, oh, I think it's overvalued, I think it's going lower, actually kind of justified. Because, again, the company is struggling as of late. So you really have to wait and see for them to completely make the rebound. Missing on annual EPS estimates since 2020. Again, we're not going to hold it against them. But again, even coming out 2023, 70 cents a share, the company was earning $5 a share before the shit hit the fan. So again, this $8.5 billion mark in my eyes is quite an obstacle for them to hurdle over. But if they are able to get there, then it's a buy, in my opinion. And again, we can see, look, even coming out of 2020, obviously the debt rose, 2020, 2021, but look at how much, $6.5 billion, $7 billion, up to 12, 13, now sitting at $14.25 billion in debt. And obviously, even coming out of these rough years going into 2022, the free cash flow came up a little bit, consistently increasing. However, cash and cash equivalents consistently decreased. So, that's what I mean. Kind of a mixed bag here. And in my opinion, it really wouldn't be something that would be on my radar right now. It really wouldn't. If we switch over here, technically, this is a 5-year chart, and you can see this is where the stock was pre-pandemic. And then, of course, these were the lows, I guess, during the pandemic. And then we kind of rebounded back up to 34, 35 when the stock was up in the 50s, and have since just been bouncing around in this big symmetrical triangle. And I know it's kind of monotonous to consistently hear me talk about these patterns, but the pattern is the pattern, right? So a symmetrical triangle, again, can either be bullish or it can be bearish. Not definitive. So, it really could go either way. However, if we switch over here to the 1 year and we back up, we can see this is where the company last posted earnings. Good beat on the top and bottom lines there. Period ending March 23rd. Earnings were posted May 1st. So next quarter's earnings over here, first week of August, is looking like around August 4th. And you see these estimates jump up here, 2.17 billion. So that's what I'm saying. Now they're really looking for big revenue to start coming back into the stock. So now you're in wait-and-see mode. And chances are, in my opinion, it will most likely just bounce around and stay in this range, and then potentially have a rally up towards the top of the trend line going into earnings, and it could even break out of this blue symmetrical long-term triangle sooner than later based on this stock earnings. And honestly, again, it has been beaten up, so if the numbers do come in phenomenally in line or above these estimates, then I can kind of understand, a breakout in the short term back up, and now it's like bouncing around at the top of this range as opposed to staying down here in the bottom of this range. So that, that would be more understandable. But even now, this August 4th, seeing if you come out, again, the blue lines were the long-term COVID triangle. And even if you come out here, look, the very, very tip of the apex, let me extend this a little bit. There you go. See, the very, very tip of the apex, as we see here, see November 3rd at the bottom of the screen, November 6th, 7th. So as we see, the actual apex is going to happen the following quarter after this next upcoming quarter. So, again, if it stays in this range and waits till November to break out, it would actually make sense in my opinion. However, again, if they rally going into these earnings here in August, closing out, again, period ending June 23, so that would be second quarter, closing out the first half of the fiscal year. And if that comes in, with pretty robust numbers, then I can understand a breakout here, trying to get back again into like the higher teens, at least the mid-high teens. Probably like a nice 10-15% run from this current level, 1448 back up to like 1648, right? That makes sense because here we have a high here of like 1860, and then we come down, right, 1811. So that's what I mean, right? If we come down here, they post earnings here, right? We can see a run up, see what I mean? Like 1680, 1690, and that would be in line of like just consistent lower tops, and that would keep it in this triangle. And again, if we switch back over here, this is mid-June of 2022 at the low, and then we ran up here to a high mid-November of 2022, and I drew those trend lines in a different color in purple, and you can see that is also forming a symmetrical triangle, which unfortunately, again, could either be bullish or it could be bearish, right? So in my opinion, it depends on the overall business, right? See how stable the revenue was increasing and even the profit margin was maintaining that 14-15% mark. That's where they have to get back to justify the breakout to the upside. Because again, we looked at a lot of those metrics that really haven't rebounded yet since pre-pandemic. They're not back to where they were. So that's why I'm saying to keep the company down here in the teens, keep it struggling, keep it down, keep it flat, justified in my opinion, justified. 2023 is going to be the breakout year because again, the company just came in with 1.82 billion. Now you're looking at 2.17 billion. So boom, that's 4 billion, right? So they're estimating 8.5 billion for the year. If they meet this or potentially slightly beat, boom, now they're bringing in 4 billion, right? So they're about 50% of the way to their forecast. And then, of course, I'm assuming the next quarter there in November that we spoke about here at this apex will most likely be even higher, 2.4, 2.5 billion, and then they'll probably round out the year with that last 2 billion. And if you add all those 4 quarters up, you're looking at roughly $8.5 billion. So that's why I'm saying it's really going to be the next 1 and 2 quarters here in first week of August, first week of November, respectively, that's really going to dictate where the stock goes. And if it's not a hot stock, and if it's not trending, and if it doesn't do much for the next 3 to 6 months, in my opinion, I wouldn't be surprised. But again, either way, could break out up or down. I know it was worth a lot more, but trust me when I tell you, Wall Street wants to make sure the company gets back to where it was, begins rolling on all cylinders, if you will, and then, trust me, when the proof is in the pudding and the numbers come in strong, that's when it's going to start trending, and you're going to see the stock go from 16 maybe, 17, and then it's going to break out into the 20s and approach, 24, 27 again, and then everyone's going to say, holy shit, Norwegian Cruise Line has really been rocking and rolling. Switching over here to stock charts very quickly. Why is this smaller? All right, whatever. But switching over here to stock charts very quickly, we're looking at the daily here. You can see the RSI has been climbing as of late here up to 57. Oh, one more thing as well. If we look at the 1-year chart, no, it wasn't a 1-year chart. Yeah, look, if we look at the 5-year chart, looking at the 20-day simple moving average, you can see obviously it's been consistently decreasing with the stock. However, look at this. It broke the moving average back in the first week of March and has since gotten back to it. We had one rejection there about May 1st, and now currently the stock did actually get above that moving average, the high at the top of the screen, 1493, and closed at 1448, right? So right here, about 14 3/4 is the 5-year, again, 5-year, 20-day simple moving average. So, again, I know it's a pain in the ass to look at all these different time frames, but again, you have to take all of this into account and find the perfect storm. That's what I'm saying, and that's why so many analysts and successful investors and traders will tell you, it's all about research. You have to read a lot. It's all about the due diligence. You really have to make sure the T's are crossed, the I's are dotted, and this is what I'm saying. You need to find situations where the numbers line up, the chart looks good, potentially forming a bullish pattern. The stock was up but has been beaten up as of late. However, the fundamentals and the technicals are supporting an uptrend now, so you're going to buy low and sell high. And, that's what I mean. In the short term now, though, we do see the triangles that we're in, right? So if the company climbs up above this 20-day moving average and begins to rally into the 15s and the 16s potentially, we're going to see that is now at the top of this triangle, and we're going to know in the short term, all right, now it's going to reject and pull back mid-range, or potentially even back here down into the 12s. So we can wait for the rally, step in on the shorts and the puts, and then make a quick profit, get out, and then potentially step in on calls and longs, and obviously so on and so forth, up and down, up and down. But in my opinion here, again, this is the 5-year, but this is key right here. And if the company can, this week coming up, potentially get above this 20-day simple moving average, then you potentially will have the rally back up here to maybe this fib here, 1533, and then, of course, to the top of the trend line, touch below $16. I just wanted to show you guys that real quick. But switching over here daily for Norwegian Cruise Line stock charts, you can see again RSI has been slowly climbing here, sitting at 57, not really telling us much. However, again, you can see here the pop above the 200-day moving average on the daily, and then the multiple rejections coming all the way down to the 50, and then look, fighting to get above and close above the 200-day moving average to realign itself into that bullish move, as opposed to consistently rejecting. And again, it could happen here in the short term, because I do know, again, we're going into June, July, so everyone starts moving into the cruise line stocks. But overall, the MACD has actually been rising slowly with the stock going back to mid-tail end of May. So, that's why I'm saying in the short term, yeah, you could have a pop up to here, the top Bollinger Band, $14.85, $14.90, $15, but then chances are they're probably going to curl and cross it back downward and bring it down. But I like using the Bollinger Bands because, in my opinion, it really does show you where the stock can get the high to and get the low to. Usually, it's right. And again, you can see that as it popped up here, end of April, early May, we had these big candles upward. You can see the widening of the Bollinger Band. It begins to trump it out anytime there's a big pop or a big drop. And then what happened? The company really has been bouncing around and has kind of been remaining flat for the last couple of weeks here. And now what do you see here? You see the top Bollinger Band basically climbing with the top wicks there of the candles. And now the bottom Bollinger Band is slightly coming up now and reforming that tightening, which means that, again, you see, boom, so you see a big drop, boom, we trump it down, and then as the Bollinger Bands tighten up, boom, that's when you have your next breakout. Bollinger Bands trumpet open on the top and bottom, and then we bounce around, we have a tightening, and then boom. So honestly, I think something is going to happen soon. I just really can't tell you if it's going up or if it's going down. But technically, based on all these rejections, I mean, I can assume it may even go down here off this moving average and potentially pull back here to this 50-day moving average of 1339, which is now right near the bottom Bollinger Band of 1340. So that is possible. But we switch over here to the weekly very quickly. And we can see on the weekly now, the stock has been in an uptrend. You have the MACD curling and crossing here as of late. And now the stock, this candle right here with the top and bottom wick basically even with your solid little body there in the center, that, if memory serves correct, I believe, correct me if I'm wrong, you guys can look this up and correct me, but I believe that also means that they're not really sure if the stock is going to go bullish or bearish. Now again, if this rose up and made the little block on the top half, then that's a bullish hammer, which is technically, obviously, bullish indicator, and the stock would continue to run. And if it closed down here with a block at the bottom of the wick, that of course would be a bearish hammer, and that would indicate that the stock is going to reject and come down. But there, I believe, is kind of that indeterminate area. So now on the weekly, you could have the stock pull back, 2 or 3% to this 50-day moving average of 1410 and retest. However, it has been in an uptrend again since March. So that's why they may potentially pull it back down again to retest it, but bounce it up, because you can see the multiple rejections prior to this last candle coming off of this moving average, and now it has closed above that candle. So that's why I'm saying, again, for the next couple of days, they could potentially slide it down to retest at the low 14s, test a moving average, but chances are with the MACD crossing and the fact that it just closed above the moving average, they will most likely bounce it off, and that's why I was saying maybe 15, the high 15s, potentially 16 in the short term may be possible. But again, in my opinion, I really wouldn't time it. These cruise lines, very, very unpredictable, and I would more than likely reevaluate the stock after they post next quarter's earnings, which will be the halftime waypoint of the fiscal year, and then we can really see if they're on track to get to that $8.5 billion forecast, or if the company is just going to remain struggling, and we really shouldn't touch it with the 10-foot pole. So, again, I know kind of a mixed bag. We do have some positives lining up. However, the negatives are really in the fundamentals and in those metrics right there. And that's why I consistently keep saying, I know it's like the 8th time I said it in the video, but we need the proof in the pudding. They have to come out with good numbers, and then we can come back and reevaluate the situation. And if the numbers are coming in very, very robustly above these estimates, and the company is absolutely killing it again like they were back in like 2018, 19, then we can say, all right, we have a winner on our hands here, and maybe we should consider loading up, and it's only a matter of time before we have a breakout here, jumping into this, and then possibly a breakout there as we see we're going the beginning of 2024, right? So that's what I'm saying. If the company consistently beats earnings, comes in with healthy numbers, and they come in above estimates for the full year of 2023, and now we're going into 2024 and the tightening of the symmetrical triangle, I'm telling you, if the numbers are there, they're going to pop the stock up. If the numbers are shitty, they're going to drag it down into the gutter. That's, facts don't care about your feelings, if you will. No, but I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, share the video. Algorithm helps me out. Subscribe to the channel if you haven't already. That's our little handshake. I will make a video and analyze any stocks you guys might be looking at, having on your watch list, considering, contemplating taking a position in. I have no problem taking a few minutes analyzing the stocks. All I ask, handshake agreement. I'll help you guys out. Help me out as well. Push the subscribe button. But moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish everyone success. Hope everyone makes a couple of dollars. Enjoy the holiday weekend. Stay safe. Be responsible. Stay positive. Stay focused. And I'll catch you guys later. Thanks for stopping by.